The gold market has been in a holding pattern for about 3 to 4 months, strongly resisting any downturn in price. What would you see, or what do you see in the next 6 months?
Well, I think there are two answers to this. If you look at the technical position, technical analysis strongly suggests that what we are seeing in gold is merely a pause in an ongoing bull market, and the pattern is best described as a pennant. And if you read the technical books on pennants, pattern analysis and so on, you'll see that you could expect a move out of the pennant similar to the move into it as a minimum objective. So that would suggest that gold could move out quite quickly and probably add another $900 or so by the end of this year. I mean, that's the sort of move in, move out thing. The point about a pennant formation is that each oscillation gets smaller and smaller and smaller until finally it breaks out. And the other thing is that the longer it is in the pennant formation, the more powerful the eventual move out is. So technically, it's looking very good. I think looking at it from a fundamental point of view, the situation in bond markets, I think, is what we should really watch. Long bond yields in all major currencies, dollar, sterling, euro, and yen, long bond yields are moving higher and higher. Now, we know that there's not much of a market in these long bonds. Why? Because they're mispriced. The yields should be higher, and they will go higher. Why do they go higher? They go higher because yields are a reflection of investment risk. And that's the whole point. There is increasing risk in this debt bubble. And no long-term investor is really willing to take the bet that this problem is going to go away. If anything, it's accelerating, and we can see this. So when those yields break out, and again, we've got similar patterns on the bond markets. I mean, gold and bonds are, well, it's if you like, bond yields rather than bond prices, are exhibiting exactly the same characteristics as gold. We've paused in these markets, in bond markets, for some time, and those yields are getting ready to break out. We're already seeing it in sterling. We're already seeing it in German bonds, and we're already seeing it in Japanese yen. The one shoe that has yet to drop is in the dollar. And I just imagine what happens when the yield on the long bond goes up through 5%, 5.25%, and heading north. That's a big crisis. And you can see that what you're going to get is a flight out of credit, out of fiat currencies, which are at the end of their lives, into real, corporeal, legal money, which is gold. So that ties together, if you like, the very bullish pattern in gold measured in dollars and what is going on in the bond markets. And I think those two things are the link that you should be watching.
I think Trump's in trouble because he wants interest rates down. But people don't want the risk at those low interest rates. If they're going to take a risk, they want a bigger interest rate on their loans, and that's the reason why the price of the interest rates are going to go up.
Yeah.